Microsoft and Apple are two of the largest companies in the world, but which one makes a better investment today? That's the question I'm going to answer in this video, comparing these two mega cap stocks on metrics like revenue, valuation, return on invested capital, and their prospects in the future to come up with the conclusion which one I think is the better buy today. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So if you look at the recent 5 years, Microsoft stock has outperformed Apple, especially since 2023, when Microsoft stock has exploded from $240 per share up to $424 per share. Apple stock has stagnated as growth has stagnated. Let's take a look at its revenue over the trailing 12 months. You can see Apple's revenue growth has flatlined in recent years, in recent year and a half or so, at $385 billion, while Microsoft continues to demonstrate revenue growth at $227 billion, closing the gap to Apple in terms of revenue. However, as I'll talk about a little bit later, Microsoft has made several large acquisitions, including Activision, Blizzard, LinkedIn, and its investments in OpenAI that are helping the company, well, not OpenAI because it accounts for it in a different way, but are helping the company boost revenue. Apple, on the other hand, has used its massive cash flow generating capabilities to return a great share of those funds back to shareholders. So Apple has been buying back shares of its own stock, while Microsoft has been investing more aggressively in growth, and it's showing as Microsoft's investment in growth are paying off, including those investments that I mentioned earlier in artificial intelligence. Now, if you compare these two on operating profitability, Microsoft has taken the big lead from Apple around 2016, and at 44.17% is way ahead of Apple at 30.76%. Microsoft has strong market share among its Office suite, among the personal computer where it sells its Windows-based software and the Windows-based products and the Microsoft Office suite, including Excel and others. Apple, meanwhile, still generates a large percentage of its revenue from hardware, and hardware, as you know, is less profitable than software because each sale of an iPhone comes with a subsequent cost of goods sold, whereas Microsoft incremental sale of a service like Microsoft Excel doesn't come with that added incremental cost of goods sold. It's already done the investment, the research and development to create the software, and then each incremental sales adds to its bottom line, especially as Microsoft has gone really light in terms of support for its Microsoft suite of products. I often mention, try to get help for Microsoft Excel. Try to call customer service. I've tried. I've never been able to find success in having a solution for some of the issues I might have on Microsoft Excel. I'm left having to go to chat forums to try and figure out some of these more complicated issues when I'm using Microsoft Excel for my financial modeling and other use cases that I have. In fact, that has been so troublesome that I've switched away from Microsoft Excel as much as I can to Google Sheets, because when I need support for certain services on Microsoft, I can't get any help. Now, that's good for Microsoft because, well, it's not good that I'm leaving, but it's good for Microsoft by not having customer support because it saves incredibly on costs and it leads to these massive operating profit margins as it has shrunk its support services for its products like Microsoft Excel. Of course, you can only do that if you have a dominant product that customers will still use and buy, even though you have limited support, right? You can't do that if your product is not a dominant product, right? Otherwise, customers would switch much more quickly than I have, right? The reason I delayed so much is because Microsoft Excel is so useful that I hesitated switching, right? And so many other individuals might be going through the same thing. Similarly, Apple, although Apple has excellent customer service in contrast to Microsoft, its primary hardware sales has led to a lower, although still excellent, operating profit margin of 30.76%. Now, looking ahead over the next 5 years, Analysts on Wall Street expect Microsoft to deliver earnings per share growth of 15.04% over the next 5 years, whereas they expect Apple to deliver 10.15% earnings per share growth over the next 5 years. So Microsoft earnings per share prospects over the next 5 years are nearly 50% better than Apple's earnings per share prospects over the next 5 years. And this is according to the analysts on Wall Street that are following Microsoft and Apple's stock. This is their forecasts for where they think the earnings per share will be over the next 5 years. Of course, nobody knows the future, and these are just estimates and assumptions, but it's the best numbers they have, and these are analysts that are close to following Apple and Microsoft stock. Now, in addition, I wanted to compare these two on return on invested capital. This is how much money the companies are making from the money that they're investing in the business, right? So things like investing in OpenAI or investing in LinkedIn and purchasing LinkedIn, or things like investing in research and development to create the next iPhone or to create the next Apple Watch. How much money are they getting back for those investments? And in this metric, Apple has been better than Microsoft. You can see here Apple 58.36%, an absolutely remarkable return on invested capital that is arguably unmatched at this scale. And then you have Microsoft at 31%, very, very strong. Indeed, both companies are very strong in this metric. They've done a good job using capital effectively to invest in new products. Now, when you have companies that are this good at return on invested capital, what you want them to do is invest more. You want them to find areas to invest because they're so good at it. So anytime as an investor you hear about Microsoft making a several billion-dollar investment, you should feel confident that that's going to pay off because Microsoft has demonstrated the capability to make effective investments. Similar with Apple, when you hear Apple making a several billion-dollar investment in some new product category or some new geography or some new company or acquisition, you should be confident that investment is going to pay off because they've demonstrated strong capabilities in that regard over long periods of time. So in that case, I like to look at total long-term assets as a proxy for this investment. And Microsoft, like I mentioned, has made many acquisitions and investments of several billions of dollars, and that's led its total long-term assets to increase all the way up to $323 billion, while Apple has $209 billion in total long-term assets. In some ways, you can look at Apple and say it generated more revenue on fewer long-term assets than Microsoft did, and that's more impressive. And it is. That would be a good way to look at it, and that's why Apple's return on invested capital is higher, because it's getting more profit, more revenue from fewer assets. So that demonstrates Apple is better in this regard, and the more Apple can find areas to invest, the more it can expand its revenue, profit, cash flow capability, because it does a better job at this than Microsoft. And finally, I wanted to compare these two on valuation. Microsoft is trading at a forward price to earnings of 31.83, while Apple is trading at a forward price to earnings of 23.68. So this comparison at these valuations is a difficult choice for me because Microsoft was better in terms of its operating profit margin, and it's in a better position, benefiting from investments in artificial intelligence. It's a more software-heavy business model, which is more profitable. It's got strong market share in its core product capabilities. And then on the flip side, Apple is trading at a much more cheaper valuation here at forward PE of 23.68. It's got a better return on invested capital. It's less asset heavy than Microsoft is, about $100 billion in fewer assets. It's using its cash to return to shareholders, which boosts earnings per share. It's a close call. But if I had to pick today, the better stock to buy would be Microsoft by a small margin. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.